Good morning, everyone. I just wanted to talk here a little bit about the opening range break and some of the difficulty that on the 15-minute opening range break that people have been having over the last 3 days. It's currently Wednesday during OPEX week, and there's kind of two factors to why these opening range breaks have been a little bit more difficult this week. And that's a combination of the fact that it's OPEX week, so we're going to get some chop and some movement. That doesn't always make them difficult. For instance, the previous OPEX week, I went for 4 for 4 on these opening range breaks. But this week has been a little bit more rocky. I think I'm 2 for 3. Yeah, I'm 2 for 3, but none of them have been easy. And I know there's people here in the room that are 0 for 3 this week, and that's kind of that's okay, right? It hasn't been normal movement trading, and so this here is what you see on my chart. This is Monday, this is Tuesday, and this is today. Wow, that's an awful W. This is today, Wednesday. So right now we are at all-time highs. So this spike up here that happened on Wednesday was an all-time high on Wednesday, right? This spike high on Tuesday and then push was all-time highs on the SPX, and then our gap up and push up this morning, a new all-time high, right? So we're making all-time highs each day here, right? We even did it on Friday there. And so, no, I think that's not this. I think this is wrong. I think this spike up was actually the all-time high. But so when we get near all-time highs, I like to size down a little bit. I still like to play them, but I like to size down a little bit because you can get some swings with some fights that are happening up there. A lot of times, you can get kind of what we had today is a quick spike up to a new all-time high, and then a flush and a lot of profit taking. So as we play these into and near all-time highs, I do like to size down just to control risk. And then also, it's OPEX week, right, which is options expiration week. And we can get some volatility, which I'll explain here in a minute, sort of the effect of OPEX week on the market. But it also plays into what happens in these or can happen in these opening range breaks is we get a lot of swings one way or the other, right? Market makers are trying to get as much premium as they can, shake people out. And so during OPEX week, I also, even if we're not near all-time highs, I like to size down a little bit so that I just don't have so much risk on that I'm going to just destroy my account if 2 or 3 trades go bad in a row. So both of those factors for me has me playing maybe half the size I've got right now, like what I would normally be playing, and also today, because we gapped up and we were pushing up. So you look at today. So you look at the fake outs, right? We had a breakout to the upside here on Monday, and then we pushed all the way down into what was a stop out level for most people. It flirted with that stop out, so if anybody had a hard stop in, they were going to get taken out. And then it made this quick little push for profits for those that didn't stop out here, and then rolled right back over, right? Yesterday, we pushed the opening range break to the low side. It didn't get quite low enough to take profits at our 50% profit target, and then just ripped higher and stopped a lot of people out, including myself. We could have taken the opening range breaks the second time to the upside. Actually, would have been a great trade. I did not because I was going to be gone in the afternoon. I knew that. And so I didn't want to have to manage something from my phone at an appointment. So that was just a stop out for me. That's okay. That's totally fine. Those happen. So then we come in today and we've gapped up to a new high. And within those first 3 candles, it's a 5-minute chart. So it was pushing a break right at that candle switchover, right? And I just didn't feel like I wanted to see more data. And there's you can do a 15-minute opening range, you can do a 30-minute, you can do an hourly. The stats on the hourly opening range break are good as well. And so I put in chat. I didn't take the 15-minute opening range break, but I was looking to take the hourly break. And so if I change the opening range break here, because it gives a little bit more data and gives that first 30 minutes or so some time to kind of shake out and some time to see more of what the market wants to do. And so we took that one here at about 85 cents per contract because of the range, and was able to take that one off down here for like 55% or so of the credit. Now, that's just a little bit of that's experience. A little bit of that is, just wanting to see some more data, and trying to be a little bit more careful. I also, have smaller size because we are in OPEX week and near all-time highs. So those are the kind of the factors around playing these. If you're struggling with these the last 3 days, I don't be upset with yourself in the sense of you're doing something wrong. These are stupid. They have been tough. The 15-minute opening range break today, if we would have taken it, and I know some people did, turned out to be a fake out as well, right? So don't, the market's going to do what it's going to do as long as you can look in the mirror and look at your log and say, I followed the plan. I did what I was supposed to do, and the market just didn't give it to me today. That's okay. Right? Yeah, you can just blame me, as Nate Bear likes to say. I just wanted to kind of cover that. And in that same one, let's talk a little bit about, what OPEX week, kind of does. I was meaning to close that. So during OPEX week and the Thursday prior to OPEX week, this is actually perfect. So if I'm looking here, let's go to a 15-minute SPX. Let's go to the SPY, because the SPY will give us a little bit, it's a little bit more reliable in the sense of we can see, volume profile and other things. So let me turn that off for a second. Whoops, man, I have forgotten how to use all of my tools. Okay, so this is Thursday of last week, right? This is Friday. Right, whoops. There we go. And this is Monday, Tuesday, and today's Wednesday, right? And on the Thursday prior to OPEX, so then let's just put something here and we'll just say OPEX, right? So this is OPEX week, meaning options expire this Friday, which tends to be a more choppy week. But when we talk about a pip below, if you've ever heard us say a pip below, that usually happens on the Thursday prior to OPEX week. And that's, at least right now, we haven't seen this week play out, that's exactly what we put in, right? It was Thursday, OPEX week, but prior to OPEX week, and we flushed, right? We put in this big time low here. And then we kind of gapped back up on Friday. And now what happens is I like to draw this gap between Thursday and Friday prior to OPEX week, I like to put a little box here. Many of you have seen me do this demo before, right? And, extrapolate that out all the way till what will be Friday, right? And what we typically get now, we've also played this. Nate and I have tried to play this before, and we're like, oh, we're going to get a reversion to the mean during OPEX week. And of course, you have this absolutely face-ripping rally, and we're trying to short into it like morons. But more often than not, what you'll get is this swing through the week. It can swing up and then swing back. It can swing down and then swing back. But during an OPEX week, you'll get this sort of movement up and then a movement down and then, kind of a movement back to, somewhere near this gap area. Now that's not, I don't want you to think that I'm telling you that I'm positive the market is going to come back, because this thing could just keep going, right? But OPEX week is trying to suck people in, take premium, bring it back around. It's basically trying to rip as many faces off. The market makers are trying to rip as many faces off as possible. And so the fact that we put in a nice pip below on Thursday, we've ripped up to all-time highs, 3 times, 4 times, I guess. And now we're in Wednesday of an OPEX week. I wouldn't be surprised. I'm not predicting, because I'm gonna take every day. I'm gonna come into the market. I'm gonna see what the market gives me, and I'm gonna take, I'm gonna play off of that. I wouldn't be surprised if over the next 2 days we drift back down into this area, maybe this, larger VP area, but that would be a pretty typical OPEX week. Whoa, so sorry. Blinded everybody. That would be a pretty typical OPEX week. That's not to say that's absolutely what's going to happen, but it's just important to kind of know, how the swings of an OPEX week can kind of happen. Right, Nate? I mean, do you remember that one time that you and I were trying to short on OPEX week that was kind of like this, and we just kept getting stopped out, and we just couldn't possibly fathom why this was happening, because it was OPEX week and it should happen every damn time, and it didn't. Yeah, but I tell people this is a good exercise: is go into your SPY and your Q charts and find that gap Thursday, Friday. Draw a line that will be on your chart until until Friday of this week. And then just every OPEX week, watch what happens. And pretty consistently, we kind of, we work our way away from it. Could be to the downside and then back. This week it just happens to be the upside. And then we kind of work our way back into that general area. It's not always perfect, right? But it's that swing, and then coming back, so that at the end of the week, we really haven't gone anywhere. Right? We've just swung high, swung low, or just swung high and back, or just swung low and back. So this will be interesting to watch for those of you who are kind of new to this. So, to kind of finish that thought is that, when you were playing these opening ranges during OPEX week, we can expect more of a swing and less of a consistent, steady move. And so that's why I kind of like to change my sizing just a little bit and be a little bit more careful. Like today, I wanted to see an hourly opening range before I was willing to take a trade. Yes, I did record this now, and if anybody has any questions on this specifically, I'll answer those and I'll keep it recording, and then I'll stop the recording and start the one on the sniper trade. Does anybody have any questions? That is, I'll put it in here. Ooh, if I could even spell my own name, is that. So And there's basic training videos. There's videos on, this will be in the opening range break section. And then the next one I'll do on the sniper will be in the sniper section. So, and I'm not, today while I'm not doing much trading. I'm doing more training, if that's okay. So Nate will keep throwing in the big trades into chat and into his trades tab. Bobby, no, I trade the 15-minute much more often than the hourly. Sometimes, like yesterday, which I didn't trade because I was going to be gone, but we got that 15-minute range break, and if sometimes it moves a little bit further, so you make your money, you take your profit, and then it reverses, and then an hour and a half after the open or whatever, you get a break to the upside, which is technically an hourly opening range break. And if you're around and the market's moving and the ticks are showing a reversal to what you had taken before, I'll take that trade, and usually that's at the 15-minute range top end if you took the bottom end. You know what I mean? So it could just be a double 15-minute opening range break, but it's well after an hour from the open. So sometimes I'll do a double like that. Or if I get stopped out, in this case, if I was here yesterday all day and able to watch this, got stopped out on this rip down, and then it would have been nice to turn around and take the move up, because what the Vold here was showing was a trend up day. So that would have been a smart reversal after the stop out, because of what the Vold was showing us. But I had an appointment and I just wasn't going to be around. Yeah, Carmi, the 5-minute ORB works great, but it's statistically I've found better statistical success with the 15-minute. But that's just me personally. You got to do your own testing and back testing, and how it sets up to your eye and all that kind of stuff. Okay, so I'm going to stop this recording and then I'll set it up so we can talk about the sniper trade.